There was so much fraud. That was
I wouldn't
why.
say everyone. No, Sarah, that's not exactly how you want to just lump everyone
No, it's
together.
not. It wasn't everyone,
I think
but
the
there
guidelines.
were.
I think from what I understand, the rules were a lot more relaxed, and you didn't have to prove as many things. And
Rules being relaxed is not the same thing as fraud.
No, the fraud was mainly with income was the primary one.
Fake W-2. So back
Fake.
then there was no, you
didn't
have
order
like
transcripts.
AI and,
You didn't order, we didn't do all that back then.
Right.
welcome to Stop Whining About Real Estate. Join us as we chat, sip, banter, and wine with the best in the biz. Grab a glass of your favorite vino, sit back, relax, and let's wine together.
Welcome, ladies and gentlemen. We've got a special treat today. This is Emmanuel St. Germain. I am your one and only host of Stop Whining About Real Estate. My assistant to my left sometimes calls herself my co-host, but we will call her Sarah Birnbaum. Welcome to the show, Sarah.
Thank you.
First timer?
Totally.
Something like that.
Yeah.
But no, we do have a special treat because we've got our underwriting manager, Marla Grassgreen, Greengrass, which way? I always forget.
Grassgreen.
For real.
No, of course not. So Marla Grassgreen is our head underwriter for our other company, Choice Mortgage Group. And it is a privilege to have you on here, Marla. So welcome to the show.
Thank you.
So happy to have you. Marla, when I first approached her about being on the show, she was like, oh, I don't know. I mean, what are we going to talk about? What are the questions going to be? And I was like, you have more experience in the mortgage world than most people that we ever come in contact with. You've been on both sides. You're amazing at underwriting, but you've also been on the sales side, and you are super well-rounded, super knowledgeable. Probably my favorite thing is watching Emmanuel try to get certain things done, and you will very easily go up against him and put him right where he belongs in his place as a loan officer. And it's wonderful to see. And so I'm just happy to have you here.
Well, thank you. I try not to put a loan officer in his place, to be honest. We want to help the loan officers.
Oh, no, for sure.
And, really just provide solutions for them in different situations, Sometimes things are easy and they fly right through. And sometimes you run into little bumps in the road, and it's just finding out ways to get over those bumps. And
The best part is like right before going on the show, I was telling Marla, have you ever been on a podcast? You ever done this before? I'm like, relax, super easy. Sarah and I will make fun of each other. And then every once in a while, we'll ask you a question. And that's the premise of the show. And she's like, well, I was going to get ready to study. I'm like, and that goes to it's
the
not
underwriting brain.
Studying.
it is, but it's the underwriting brain. So let's talk a little bit about the underwriting brain. Lots of people, the millions of fans that we have, the audience, they may not know what an underwriter is or what an underwriter does. So let's just go real basically in the mortgage world. What does an underwriter do? What are you responsible for?
So the underwriter is responsible for risk evaluation, and there's a couple of different things that are involved in evaluating the risk of lending money to a borrower. So we look at credit, we look at income, we look at assets, and we look at collateral. Those are the main ones. Credit history, and evaluate the borrower's profile to make sure that they meet our agency guidelines and any overlays that we might have as a company. We don't have many. We pretty much follow agency guidelines. But overall, that's like a summary of the job of an underwriter is to evaluate the risk, review everything in detail. It's very detail oriented, and approving loans so borrowers can get into their new homes is the goal.
Awesome. So let me break down a couple of those terms for anyone like Simple Sarah who need to understand what collateral is, the house, right? It's what we're actually lending on.
Correct.
And when she says the term agency, what we're referring to there is Fannie Mae and Freddie Mac. Mm-hmm. Those are what we call
FHA
conventional
or VA
loans.
or
Right.
USDA.
Mm-hmm.
Yes. We gotta try and keep it simple and not too mortgage talk. We don't want Simple Sarah getting left out here, so we want to include her. Sarah,
I will say that in the 5 years that I've worked for this company, with this company, I've learned quite a bit of
Yes, you have,
the
and you've gotten
mortgage
very good.
lingo. Because when I first started, not only did I not know a single thing about mortgages, I had never even had a mortgage my own. Since then, I now have a mortgage, which I love paying every single month, and
It's awesome, isn't it?
it's my favorite check. And but listening to you, Jared, being in meetings, being in loan officer meetings, like I've had to pick up so I could speak to it properly and have a little bit of an understanding of what I'm speaking about when I go talk to agents and referral
You have more
partners.
than a little bit. I tease you, but you have a very good understanding and you do a very good job. So.
Thank you. I appreciate that. But with that being said, sometimes you guys do go off into mortgage acceleration land, and I'm like, what's
not my
that
world.
mean? Yes. So I appreciate the explanation because I am a sponge because I want to learn as much as possible. So I do have, legs to stand on. So.
But Marla, you weren't always in underwriting, right? What's your background in the mortgage space? Because I think that one of the things that I love working with you is that the problem-solving mentality is based on you've been on our side of the street, meaning you've been in sales before, right? So talk a little bit about your sales experience.
So when I started out in the industry, I was in the operations side of the business. And then I realized that I was teaching all the loan officers how to do their job. And they were getting paid a lot more money than me. So after that revelation, I decided that I wanted to go into sales. And I originally was in wholesale sales, working with brokers, and then I was in correspondent sales, and then I was also a loan officer. So kind of having all that background in addition to the underwriting background, makes me understand that there's a borrower on the end of this transaction, a person who's extremely nervous about this whole situation. If they've never bought a home before, what's involved, what do they have to do, everything they're signing, what does it mean? And, just providing like really detailed information to the loan officer, especially if there's something that comes up out of the ordinary, so that they can explain it to the client in a way that they don't get anxious or, about it. They feel comfortable that we've got it handled and we just need to get whatever small type of thing it is without, creating anxiety for the client.
I think that's important.
And that's part of like just, understanding that there's two sides to this. Yes, we're a business and we want to close the loan, but we also have, there's real people involved, mom, dad, kids,
Yeah.
So
I think
underwriting with empathy.
Yeah.
I like that.
Wow, that's the title of our show today.
Yeah, perfect.
No, but I think that's important. I think when you understand the different aspects of the full picture, it helps you go into every scenario a little bit differently and understanding that it is not just a transaction that's coming across your desk and guidelines that you have to look at, but there is, a whole group of people on the other side that are waiting for that approval, that, explanation or that pass to say we can move to the next step.
Right.
And I think that's huge. And that I think makes your department and you as the manager very unique because you have had both experiences.
Right. And we try to if something out of the ordinary comes up, we'll try to give our processors who communicate more with the borrower than we do, different ideas. But it's not something that just maybe they can't get the one thing that we asked for, but there's other
ways to
alternative things they could get. If they can't get this, they could get that. So just trying to give the loan officers guidance on what they can tell their client. If they go, oh, well, I don't have that, then, okay, what if we can get this or what if we can get that, depending on what it is.
It's a collaborative approach.
Yes. Yes.
And I think that not only is the collaboration piece very important for me. So now we have taking my, and I have the loan. So part of what you were joking with is that part of me is a loan officer on one hand because I'm dealing in a transaction, and another part of me is a business owner that if we're not able to sell this loan, it's coming out of my pocket. So, and I make significantly less as a loan officer than what I would lose out of my pocket in the other hand. So you have to weigh all those things. And I think that we've got a really good process by which if a loan officer disagrees with an underwriter, and I think that one of the things that people in our company or in any company, we don't give Marla and her team enough credit, is that I've worked with a lot of underwriters, and in the past, I really liked arguing with underwriters because
He used to argue with me. He doesn't really anymore.
I don't argue.
Knows better.
Well, no, it's because it's
It was because he didn't know me. That's why. Because
it's not about arguing. It's about getting to the right resolution.
Correct.
Right.
And if you have someone who's willing to go down the path of trying to find the right resolution with you, which is what we have with Marla and what Marla teaches her underwriters, well, now all of a sudden, I don't need to argue. We're working together.
Right.
And in other companies and in other scenarios, it doesn't feel that way for
like
a
you're
lot of
against each
loan
other.
officer. It feels like gridlock.
Yeah.
And who's right?
And it's just about winning.
And sometimes what happens is that a lot of underwriters dig their heels in and they don't want to move. Kind of like when Boo Boo doesn't want to go for a walk. She
does
sits
not wanna
back,
go.
puts all her weight down, rolls
She puts
over.
her big girl brakes on.
She puts her big girl brakes on.
does.
Yes.
That's what I used to say
big
about my other
girl.
dog. Her big girl brakes.
Yes. But I think that makes a really big deal. And I think the other thing to your point, Sarah, I think what people forget is and this is a great little exercise, is you in a singular transaction, you look at the amount of families that are affected, right? And it's probably, I'm going to guess there's probably 30 to 40 people per transaction when you add everybody. When you take a look at the buying agent, the listing agent, assuming they're married, maybe they have kids. Now you add the buyer, the seller, the mortgage person, the title person, the insurance, all of their extended families, the processor, like everybody, the loan partner, our closer, the underwriter. There's
Everybody
so
wants
many
it to
people.
close so everybody can get paid.
Right. There's so many people that are all involved in that transaction, and underwriting is really, really important, a piece of that. And if you don't have, as a loan officer, if you don't have confidence that your underwriter is working to help you, it's really difficult.
Yeah, it can be frustrating, I would imagine.
Very frustrating.
Yeah, because you're like, every time I put this in there, they just want to throw it back at me.
Yeah. I remember working with a company. So this is before. So for anyone who doesn't know what delegated is, so like we at our company, Choice Mortgage Group, we're a delegated lender, which means that
We have in-house
Marla
underwriting
and
house.
her team, the underwriting team, works for the company. We're not sending it out to be underwritten somewhere else. So it's
Which is non-delegated.
which is non-delegated correspondent, or you could be a
Sarah.
broker.
Point
Yes.
for me.
Well, good job, Sarah. But it's a control piece and it's a way to work together. But the biggest piece is that you're working with the same people all the time. So once you develop your relationships, once you understand how they think, you can work and be a much more cohesive unit. When you are, one of my frustrations before we got delegated and we hired Marla, and Marla built out our whole delegated platform. Before we did that, we would have the underwriting happen at the lender that we were sending the loans to. And
But you had no control.
it wasn't just control. Here was my problem. So it's a very popular lender, and I won't mention the name. There were some aspects of them that were great and some aspects were not. Sometimes you get a really dumb underwriter and you could pass anything by them, which is bad for risk. Other times you'd still get another dumb underwriter, and then that person, like, you'd have to explain everything to them. And then
You're like, so I'm underwriting this loan. Got it.
so then, no, the point is you just never know what you would get.
Right.
Right. And so the piece that ends up happening is that it's hard to respect underwriting when, imagine like if you're always dealing with, I'm trying to think of what's a good analogy. It's a really tough analogy because I never in my career in 20 years was able to work with the same people over and over.
Right. That makes a difference.
It does, because I get how your brain works. Once I know how your brain works, now I know what you'll accept, what you won't. I can be proactive. I can do my mind games and things that I need to do. No, but it's like, why wait? All right, I'm not sure how Marla's going to think on this one. Perfect. Send an email. So we use something called Scenario Desk, which is, perfect. One of our loan officers came into the office today and he goes, hey, this is the guideline. I'm like, okay, but don't wait. If you know it's the guideline, here's how I want you to play it. Email Scenario Desk. Say, hey, here's what my scenario is. I think this is what it says in the guideline. Can you confirm? Once they confirm, you copy and paste that and you put that on your LO submission so that everybody below it says, per Marla, per scenario desk, whatever it is. And now you've already gotten your,
I used to have an underwriter that worked for me, and I had to get her. Literally, this was when we had paper files, so it was a long time ago. But I had to.
Not that long ago. We didn't go paperless that long ago.
No, you guys didn't go paperless.
We were
very
last
late.
to the
You were
party.
very late to the game. But
True.
I used to have to get her a stag. She would drive me crazy. She's like, well, write initial this that says you approved it. Say per Marla. So I literally bought her a stamp, a red stamp.
You're like,
so she could put it on there and go,
Per Marla.
per Marla. Marla said it was okay.
Do you have any? So let's
need one of
go
those
some,
stamps.
I want a
Per manual.
story. I want some fun story. Do you have any good stories from your? I mean, you've been doing this for. I know you just turned 26, but other than being 26, do you have any good
a
stories?
Challenging story or
No, just in general, like any weird scenarios, anything that you were shocked, or have you seen any? We don't have any fraud here, so any major fraud before here?
Oh yeah, we used to see major fraud all the time.
Like what?
Well, wasn't
Pay
everybody doing
stubs.
fraud in like 2006, 2007?
There was so much fraud. That was
I wouldn't
why.
say everyone. No, Sarah, that's not exactly how you want to just lump everyone
No, it's not.
together.
It wasn't everyone,
I think
but
the
there
guidelines.
were-
I think from what I understand, the rules were a lot more relaxed, and you didn't have to prove as many things. And
Rules being relaxed is not the same thing as fraud.
No, the fraud was mainly with income was the primary one.
Fake W-2. So back
Fake.
then there was no. You
You didn't
have
order
like AI and-
transcripts.
yeah.
You didn't order. We didn't do all that back then.
Right.
so people were just submitting whatever they wanted.
But they would just make up W-2s and make up pay stubs and. No, they literally would.
Yeah. So you could. I mean, you could.
And you could not tell. And I had a group that was in Miami, and Miami was so bad.
Still is.
I'm not saying it just is. It was. It was just nationally. It was one of the highest percentage of fraud in the country, and that's where we saw. You had it other places too, but the majority of it came from Miami. It was just a lot of
Forged documents.
Yeah.
Yeah,
crazy.
And we never used to look at we didn't look on the credit report back then and see who their employer was, and then say, oh well, this isn't who they said their
Match.
employer is. Yeah, we didn't check that. Look at those things.
So underwriting has
It's
changed a lot.
Changed a lot over the years. It's you have to just because of everything that happened in 2008 when the market crashed, everything got revamped. Really, as far as underwriting guidelines, and they changed things to be a little more risk adverse. So you don't, you're not taking as much risk because you're doing some other things up front to make sure that your risk is mitigated. And,
Which is smart.
Right. And back then there wasn't no risk mitigation. It was really wasn't. It was just you have a pay stub, you have a W-2, they say the same name, they match up.
Cool. Moving forward.
Who knows if they made it with a Word document? I don't know.
Wow.
And they weren't that sophisticated back then either.
Right.
So, but the industry has totally changed. And
How
we
is
really
technology changing the industry now? For you, just the underwriting piece.
Technology is changing a lot of things. And I was actually talking to, Jared earlier, because being in underwriting, I'm kind of adverse to the whole AI thing.
Right.
Because when you search something on Google and AI comes up, if you click on it, you can see where they pulled the information from. But usually it's just some other lender's website or something. It's not actually from Fannie Mae or Freddie Mac or FHA where they got that information.
Right.
And it's not always accurate. So, using AI for guidelines and things like that, I'm not a fan of, but there are some things we just finished the integration with the VA, submit all our files to them directly, where you used to have to go out to a separate website and log in and then put the file in there. Now you can do it right from your system. So as they build out more integrations like that, it's just going to speed up the process and make it easier.
So
Perfect.
it's good and bad, right? So it's good in the sense that it's speeding up certain processes that are just kind of now less manual.
Yep.
But then there's other pieces where people have to actually use their brain a little bit and check where the source is and check where it came from and maybe do some kind of, double checking.
But if you think so, the speed, from my perspective, it's two things. We look for speed and reduce cost, right? So the concept for me, I love in our applications that a client can just attach their pay stubs. They can attach by connecting their income and then connecting also their bank statements.
Accounts, yeah.
But doesn't that make it easier for you also if you're looking at the same type? Because whether Betty Bob works for uses ADP or someone uses some other, does it not look all the same on your end when you receive it, or does it look different depending on who their employer?
Like the assets?
No, the income piece.
Like the paychecks and stuff.
Because we don't need paychecks if they attach their income.
Like it depends what income docs they attached. So, but as far as like if we get a written VOE, like we pull in a written VOE, we don't even need their pay stubs or anything. You can use a VOE, a written VOE. It's just, a lot of times you have people, they change.
Verification of employment.
Yeah, verification of employment, sorry. Mm-hmm. Sometimes you can just use that document if it's, especially if they've been on their job for a while. Sometimes it's a little more cumbersome if you have people that have changed jobs a bunch of times, and then you have to go back and get more detailed information to fill in the gaps and things.
But I think where you are going with it is that it makes everything a little bit more uniform. So if they attach their bank account statements to it, it all kind of comes over, and it's not somebody taking a picture of it.
It's also easier for the borrower. So like with the account check, which is the asset one that we use most often, the account check report, the processor, so the borrower gives us access to their account for, I think, like 60 days or something, whatever they put in there.
You're like in a read only.
Right. You can't do anything. You can just read it. But like once the borrower pays their EMD,
so
the
that's
processor,
their deposit on their contract.
Sorry, I speak another language.
You do.
Which is their deposit on their contract. But once they've paid their deposit, the processor can now just go and pull an updated account check report without having going back to the borrower and say, I need your bank statement from this date to this date that shows that the deposit cleared, or I need a transaction history from this date to this date that shows that this cleared. It makes it less things that we have to go back to the borrower and ask them because we're able to obtain it ourselves.
Which is amazing because as a recent obtainee of a mortgage, it's a lot of paperwork and finding and scanning. And I did this all before we went kind of into the new systems. And it's a decent amount of like paperwork and stuff that you have to find, which I understand why, because they want to make sure that you're really checked out, but it's work.
Right. And a lot of things that are put in place, after 2008, a lot of things that were put in place to protect the borrowers, to make sure, because that was the other problem in 2008 is the fraud wasn't just the borrowers. The fraud was some of these companies that were overcharging borrowers. The borrower didn't really know what fees they were paying. There was no such thing as a closing disclosure. There was a HUD, which is another closing form, but there was no such thing as a closing disclosure. We used to have what was called a good faith estimate. Now we have a loan estimate, but the CFPB put a lot of rules in around that to make sure that the borrower was aware
of what they were
paying. And so that's just kind of how the industry's evolved over time.
I think consumers are very protected. Like, I almost find it a smidge comical when somebody says, I want my attorney to review a package. I'm like, go ahead. Let me know,
Be my guest.
You might as well give the $1,000 to someone else. Like, no, I get it if you're doing a unique type loan, if you're doing some sort of non-QM that has some special verbiage in there, that maybe that's one thing.
What's non-QM?
Non-QM would be any kind of non-agency loan. Yeah, it stands for non-qualified mortgage, but it's like if you're doing a bank statement loan or just something different. But what I'm getting at is simply the point that if it's a conventional type loan, an FHA type loan, a VA type loan, lenders aren't going to change the verbiage in their closing package.
No.
So do you understand the numbers? And then that's really it. From there, go ahead. But I tell everyone that at the end of the day, 90% of what you're signing is the bank protecting its own butt. And that's really because at some point, it's overdone. They need to cut that stuff down by, you could get rid of 2/3. We have to send 3 different documents that says what the value of your house is and you were given a copy of your appraisal. Like, it's so over redundant.
Some of it is. And maybe they'll look at it and reduce some of that documentation.
No, they never will because they won't agree to it. It's going to be gridlock.
Well, I don't see it changing anytime soon. But
Agreed, that's my point. We got to simplify it. What do you think is next, Marla, in underwriting? What's, not in the next year. What do you think happens with underwriting and loans in 5 years from now?
I just think there's a lot more automation. I mean, I don't know, but obviously, we should be able to get more information on income and collateral and assets and all those different things through resources without having to get the borrower to do it. So hopefully, as these different AI things and different computer technologies come into play, we'll be able to speed up things. And the agencies are also look at integrating with our systems so that they can read what we have, and it reads into the findings, and helps to give us approvals based. They have the information versus having to enter it manually in our system and then they read it. I just think we're going to see a lot of automation.
What about self-employed individuals? So there's a lot of options now. There's a lot of different types of products. There's different types of tax returns for different types of self-employed people. But the general narrative is always that, people say, well, I'm not going to qualify. I'm self-employed.
I don't have a W-2.
Which essentially just means that my accountant and I try to get as gray and creative as we can.
Right. And part of that is, that's one of the, you talked about our scenario desk earlier, and that's one of the good things about our scenario desk is our underwriting team will actually look at self-employed income for a loan officer and calculate the income for them. So, because as Emmanuel said, self-employed income can be confusing.
Tricky.
It could be simple. It could be just, their compensation of officers, a profit, and you're done.
What's so funny?
But it's not.
Every time I hear the word simple, I think Simple Sarah.
Oh, well, that's good. Haunt you.
But he made me lose my train of thought.
No, I get it. So I'll continue.
Self-employed.
I know how your brain.
Simple Sarah and throw me off.
I know how your brain works. So
but anyway, so
for self-employed people, we have lots of options.
Right, and there's different. Sometimes it's confusing, and even though an LO might know the basics about self-employed income, sometimes you just need a second set of eyes to look at it and figure it out for you, because there's different things that they allow us to add back. And, just because your bottom line number says one thing doesn't necessarily mean that's the number that we would use for qualifying. Could be better, could be worse. But, there's a method that we're required to use to calculate that. But it can benefit the borrower once you actually know what you're allowed to add back to the.
Do you think based on that, because if things became much more automated, and you were saying they take all the documentation, they take all of the findings and they put it in and they can kind of transcribe it and say, this is a low risk or this is something that is good, and the computer may be able to do that. So that's a lot of what your job is to do now. But with that, do you think that AI could potentially fully take over what you do? Because there are instances where they need, I'm assuming.
I think it'll be a while before that can happen, because the AI would have to be able to read a pay stub, be able to and they're all in different formats. And, I'm not a computer person, so I'm not going to say how that could work. But I think that that's going to be a little farther down the line, because I don't think you're going to be able to remove the underwriter 100% from the equation, but you're going to be able to speed up the process.
I think there'll be so it's all about the ability of AI to read documents and to be able to identify red flags. So there are certain things that will help. Like, imagine the insurance, title, things like that. Like, if you're able to scan it in and it's able to read it quickly and see if anything is out of whack, doesn't line up with what it needs to be, then it would pop a red flag, and you would need a human to actually interact and to be involved.
Correct. Yeah.
So I think it's just going to be from an efficiency standpoint for consumers. We are constantly, all right, now the owner hat on, we're constantly working on speed. As I said, you want the client experience to be super, super easy. So part of that, and I think that one of the struggles that we have is it's in order to give when you're a really smart LO, here's how you should think. How do I make Marla's job easy? Because making her job easy means that she gets to sign off on the loan fast. She signs off on the loan fast. I look like a hero to my client, to my referral partners, therefore I get more. So how can I help do that? Well, now you go to the front and you start at the beginning because we want to be proactive kids, not reactive. And what you want to do is at that point say, okay, well, what is Marla saying? What did you hear her say? She said that if you attach your verification of income and your verification of assets to your loan application, my job is super simple. Great. A consumer does not know how to do that.
No problem.
So that needs to be part of the pitch from the loan officer in the very beginning. Right? Here's what's going to happen, Roy. When you fill out your loan application, I need you to do the following. Here's the top questions that I get. Here's why this is important. And then here's the kicker in sales. Here's the benefit to you. Don't make the benefit about me.
No, of course.
Obviously, there's a benefit for Marla and I. Our job looks easy when it happens, but it's not about us.
Right, but like
it's
I pointed out before,
experience.
it does make it easier for the borrower.
But that's what I'm saying.
Yeah.
It's you want to make it all about the borrower experience.
Right.
And so I think the more that loan officers adopt to it, the better of a job that they do, the faster and cheaper the cost of. And so from our standpoint as an owner, the lower your cost, the better the interest rates we're able to offer the consumers. So it's really a win-win. We all should be trying to get to the same spot.
I love that. This is why he's the boss.
Is that why?
One of the reasons. So, all right, when you're not underwriting, let's get to the human side of Marla, because we have two of us have an affinity to animals. One happens to be allergic. That one over there.
But she likes animals.
She does love. She loves dogs. She's just allergic.
I'm very allergic.
She is very allergic.
I wouldn't know what to do. My little boo-boo.
There's the voice.
Little
My
boo-boo.
little boo-boo. All right, so I know you love my boo-boo too, but we were talking about this yesterday because the guest that we had on yesterday was big into the rescue dog stuff.
Yes.
And I know that that's been a big part, and you volunteered.
That is a big
You've
thing
had
for
some
me.
crazy stories, so tell us a little bit about, let's humanize this underwriter, ladies and gentlemen.
So once a week, I go to an animal rescue down in Fort Lauderdale, and I volunteer there in.
What's it called?
It's called Everglades Angels Animal Rescue,
Okay.
and it's actually dog rescue. The one I used to work at another one that did dogs and cats, but this is just dogs. And typically the dogs that we're rescuing are found on the street, or somebody abandoned them, or somebody tied them up outside the rescue and left them there. And then we get in the morning and there's a dog tied up with all its toys and its blankets. It's very sad. But we take great care of all the animals. Like even if they're sick, like we have 2 dogs right now at the rescue. One's older guy, he's 13, but the young one, she's only like 2 or 3, and they both have cancer. But we don't put any dogs down. We will pay for that. We'll raise the money and we will take care of that dog until it, can't survive anymore. And it just gives you a great sense of satisfaction to, I thought like when I first started doing it, I was going to want to bring all the dogs home. But I know I cannot bring all the dogs home. And all the dogs have their own thing. Like this one doesn't like cats, and this one doesn't do well with other dogs, and this one doesn't do well with little dogs.
They all have
and
their
this one
unique
doesn't
personalities.
Like men. And so I know I cannot bring all the dogs home. I have fostered some dogs. They ate a lot of my stuff, but
Is fostering difficult? I mean, I've never fostered anything,
Fostering
but
is
you kind
kinda
of have to
like-
accept it and then give it back. Like,
Yeah.
well, I think you feel good when you find them a home.
Yeah.
but
you
then
know?
don't. How do you fall in love knowing you're going to let something go, though?
So you can go ahead.
Go ahead.
So I have a good friend who, her and her fiance, they own 2 dogs, 2 pit bulls that are theirs, and then they foster pit bulls.
Which is good because they're the hardest to get fosters for.
Correct.
And they're not all bad, even though everyone thinks they're
No,
bad.
they're not all bad, but they all have their things. A lot
They
of
all
them
have
come
their
with their
things.
things.
Everyone
So
has their
some, they have had some that don't like men or don't like women, don't do well with other dogs. They luckily live up north, so they have a basement, so there's a separation. But like there's work, so they have to feed and walk the two main dogs. Then they got to put them up behind the gate. Then the dog from underneath comes out, walks, plays for a couple hours out on the main floor. Like it's a process. But
no, it is. You have to be committed to doing it.
100%. They don't have kids, and this is their passion project.
Right. My cousins do that too.
But I will say that they've fostered dogs sometimes for up to a year where this dog is in their house and a part of their family, and they're always constantly bringing it to different events and stuff and trying to find it a home. And while they're sad every time the dog leaves to go with another family, it's a bittersweet. They're happy for that dog that they found a family, and that the family that they're going to usually has the setup for that dog to live freely in the house. So
what I was going to say, in like the example you gave, I mean, all I could think was like quarantine. Like you're separated, you can't be with the other dogs.
You have to sometimes separate them. Like we have to be very careful at the rescue. I mean,
I get it, but that's a smidge better than being at a kennel at a rescue.
It's still better than being at a rescue.
I'm not saying it isn't. I'm just saying that, all right, a dog that comes into, like, if like you come into my life, like you have everything, you're going to get spoiled. Right. All of a sudden, like, I don't know, I'd have a hard time having a dog for a year and giving it back.
It's bittersweet.
It's bittersweet.
Like when
and
you
they're
find
just so
them a really good home,
that they,
it's like I had this one guy, his name was, oh God, I can't remember his name anyways. Oh, Watson. And he was like a beagle hound dog. Like he looked like a big beagle.
Okay.
And he was so cute. And he really got along with pretty much everyone. And I had this couple come to my house to meet him. And it was weird. Like he like kind of like just like gravitated to these people. He like knew. And I said to the guy, I'm like, well, why don't you sit down on the couch? He'll come over probably and sit by you on the couch. So he sat down on the couch and Watson came right over and the guy said, do you want me to be your dad? And then Watson gave him kisses. And I was like,
meant to be.
This is beautiful.
Yeah. And then you just feel good. And then you know that dog
really
is in a good,
because, it just like, it was like just worked out.
For the rest of its life.
And then they send you pictures and tell you how they're doing. And, I had one puppy and they're like sending me pictures from the Keys. He's on a boat in the Keys, like living the life.
It's a good feel good.
So it makes you feel good that you got the dog a good home and,
yes.
Yeah.
Yeah.
Perfect. Perfect. I guess that would have been more of a cat.
Emmanuel wants to keep all of the things and make them all have this very perfect existence.
Well, I mean, I don't know about that, but you
should start adopting Goldens.
No.
He'd keep them all. He'd have a whole house full of Goldens.
I mean, they are pretty much the best breed, not gonna lie.
They are. They have a lot of hair. So much hair.
Yeah. You need to have
Roomba.
Yes, Roomba helps something. Well done, Marla. Well, we thank you and we love you. Thank you for being on the show. And good night.
Good night. Good night.
Good night.
Good night. Good luck and good
Emmanuel's older.
Farewell.
He's going to bed soon. It's almost 5 o'clock.
Close. Awesome. Well, that's a wrap. Thanks, guys.
Bye. Okay, that's enough whining for one day. We are so happy that you could join us today on Stop Whining About Real Estate. So please, not only listen, but subscribe, follow us, download, share, and if you're feeling it, give us a 5-star review. Hey, and if you'd like to be a guest on the show, please email stopwhining@choicemortgage.com. Thanks so much.